So you've managed to save some money and now you're looking to make it grow. Investing is the buzzword you're probably familiar with. It's the act of putting your money to work in a way that aims to yield more in the future. But if you're new to this, the world of investing can seem daunting, with jargon like bear and bull markets, ETFs, index funds, limit orders, and ticker symbols making your head spin. I'm here to tell you that investing doesn't have to be a complex ordeal. In this video, we'll break down the essentials: why you should invest, how to start investing, and what investment avenues are best for you. We'll make it all digestible, even if you're a complete novice. We'll cover some fundamental strategies for beginners, answer common questions, and walk through a practical example of making an investment. Why invest, you ask? It's simple. To make your money work for you. Let's say you've stashed your savings in a traditional bank account where interest rates are laughably low. Think 0.01% to 0.15%. Imagine having $1 million in such an account. At 0.01%, you'd only earn $100 after a year. That's hardly your money working hard. Now picture a 10% return. That's $100,000. Even a 5% return would give you $50,000 annually, which could be enough for a comfortable retirement. This is where the magic of compound interest comes into play, where you earn interest on your interest, leading to exponential growth over time. Investing also helps combat inflation, which erodes the value of your money over time. In the US, the Federal Reserve targets a 2% inflation rate annually, but recent reports suggest it's been between 6 to 8%. If your savings don't keep up with inflation, they lose purchasing power. To see inflation's impact firsthand, consider the cost of mailing a letter. In 1971, it was just 8 cents. Now it's 63 cents. The process hasn't changed. Inflation has simply driven the price up. How do we invest then? The stock market is one avenue where investing in thriving companies can lead to financial gains. Real estate is another option. Think of how much your family home has appreciated since the 90s. Collectibles like first edition Pokemon cards have also skyrocketed in value. However, all investments come with risks, especially for beginners trying to navigate what to invest in. For this video, we focus on stock market investments as they are common and provide relatively predictable returns over extended periods. Think 10 years or more. We'll look at the S&P 500 as an example, an index representing the top 500 US companies. Over time, despite dips and crashes, this index has shown an upward trajectory. Historically, the S&P 500 has returned about 8 to 10% annually since its inception. If you had invested $100 in 1980, adjusted for inflation, that investment could be worth around $9,177 today, a significant increase. So what should you actually invest in as a beginner? While some may dabble in individual stocks like Coca-Cola or Tesla, this requires more active management and can be volatile. A better approach for beginners is passive investing, buying into an index fund and checking on it sporadically while it grows over time. Index funds are collections of stocks that track an entire stock index like the S&P 500 or NASDAQ and are less costly than actively managed mutual funds. By consistently investing in an index fund over time, reaching millionaire status is almost certain. In summary, investing is about growing your money to ensure it doesn't lose value over time due to inflation and low interest rates from savings accounts. By understanding and utilizing tools like index funds, even beginners can embark on a successful investment journey. Are you ready to put your hard-earned savings to work? Investing might sound intimidating with all its complex terms and strategies, but don't worry. We're here to simplify it for you. In today's guide, we'll demystify investing by explaining why it's essential, how to start doing it effectively, and what options are best suited for beginners. We'll also tackle some beginner strategies and commonly asked questions. Investing is crucial because it empowers your money to grow and outpace inflation. Parking your cash in a regular bank account with negligible interest rates won't cut it. For instance, $1 million at a 0.01% interest rate in a bank account would barely earn enough after a year to be noticeable. In contrast, earning even a modest percentage can translate into substantial earnings over time. This brings us to the wonder of compound interest, the phenomenon where your earnings generate their own earnings over time. It's like planting a tree from a seed and watching it grow year after year. Inflation is another reason to invest. With prices rising over time, just look at how postage stamps have increased in price since the 70s. You need your savings to do more than just sit idle. So how does one begin investing? The stock market offers various opportunities through company stocks or real estate investments that appreciate over time. Yet for beginners, navigating these options can be tricky. Let's zero in on stock market investing. Over the long term, indices like the S&P 500 have consistently trended upwards despite occasional downturns. Investing here has historically provided solid returns of 8 to 10% per year. Now, on to the question of what exactly a beginner should invest in. Individual stocks can be alluring but require active management and carry higher risk. A more passive and stress-free approach involves investing in index funds, diversified funds that track major stock indices and offer a hands-off way to grow your wealth consistently. In essence, investing isn't just for those with financial savvy. It's accessible to everyone with the right information and tools. By opting for index funds and adopting a long-term perspective, even novice investors can see their savings multiply significantly. Stay tuned as we delve deeper into the mechanics of index funds and how they offer a straightforward path to financial growth for any aspiring investor.